The CLS Market Review for the week of August 26th, 2013. I'm Matt Harwell. Following a decline on Wednesday after the release of Federal Reserve minutes, markets rallied Thursday and Friday to close slightly higher on the week. The S&P 500 closed up 0.5%, while the small cap stocks were up over 1%. Perhaps the biggest news of the week was Steve Ballmer's announcement he would be stepping down as CEO of Microsoft. The initial reaction was very positive as Microsoft shares were up 7% on the news. Looks like I'll finally have to give up that dream of owning a Zune phone. Here now with this week's commentary is my favorite chief investment strategist and adjunct professor emeritus, Scott Kuby. Scott.
Thank you, Matt. Over the last few weeks, my colleagues have shared how international exchange-traded funds have the potential to improve results for portfolios managed by CLS. ETFs are an excellent tool for international investing because ETFs offer lower cost access to a far wider range of countries, regions, and sectors than traditional mutual funds. ETFs offer similar advantages to investors using something generally referred to as factor strategies. Factor strategies generally seek to adjust the mix or weights of the securities in an index to improve the return or the general risk-reward potential of the portfolio. Today, we will discuss how factor strategies work and provide examples of how their use by CLS may contribute to the performance of your portfolio. Factor strategies may be difficult for some investors to grasp because they depart from the familiar size and style continuums used in the Morningstar style box. While certain factor strategies may have a growth or value tilt, it makes more sense to think of them as alternative methods for dividing the universe of stocks into categories. Like many ETF innovations, these strategies have existed for a long time, but were designed to offer moderately improved returns for moderate levels of additional risk. The low fees associated with large institutional portfolios made them an excellent fit, but average investors had significantly fewer options. ETFs changed this by offering lower fees and making these strategies more competitive with traditional index ETFs. While dozens of factor ETFs exist, they primarily fall into four different groups. The first group of factor ETFs invests in all or most of the securities in the original index, but weights them differently. For example, some CLS portfolios use an ETF with the same securities as the S&P 500, but weights them by revenue instead of market capitalization. Year to date, a factor ETF used by CLS with this structure has outperformed the S&P 500 by 3.62%. A second type of factor ETF seeks to invest in the least risky or highest yielding stocks in an index. The two most popular low volatility strategies have raised over $6 billion since their launch just over 2 years ago. Lower risk equity ETFs fit well with CLS's risk budgeting approach and give our portfolio managers more tools to use for conservative clients. The third type of factor ETF makes a more dramatic shift from the index by excluding large swaths of stocks from the portfolio. Many investors anticipate that growth in emerging markets will be driven more by the local consumer than by exporting to developed countries. Yet exporters and the banks that finance them are often the top holdings in emerging market ETFs. In this instance, CLS utilizes a factor ETF focused on consumer markets, which has outperformed a broader ETF by over 7% this year. The final set of factor ETFs provide exposure to stocks grouped by factors popular in academic research. These ETFs are based on factors like size, value, quality, and momentum. One of CLS's key themes this year is quality stocks. In this week's PDF and podcast, I will further break down these type of factor ETFs and how they are being utilized in CLS portfolios. We expect factor ETFs to grow in importance as there is a lot of excellent research out there supporting many of these factors. At CLS, our analysts research these ETFs for opportunities to be used in portfolios while making sure we are avoiding those that are expensive or unlikely to bring value to your portfolio. As always, we are focused on creating balanced, risk-budgeted portfolios designed to help our clients reach their goals.
Thank you, Scott. For those keeping score at home, you said the word ETF 20 times in that commentary. It's got to be some kind of record. something. As mentioned earlier, look to this week's PDF and podcast for a more in-depth look at factor ETFs 21. That concludes our update for the final week of August, and we hope to see you back next Tuesday. Have a great week.